this week we have regional strategies ideas. So as usual, for the first week of the month, we're going to highlight the index movement. So for this week, let's take a look the update for the FTSE Asian 40 index. As per last week, the rebound that we expected has not been materialized, as the index struggling to surge past the immediate resistance sub at 200-day moving average. The index also has taken out the major long-term downtrend line, which actually stands since 2020 low. So a 3-day breakout rule is actually has been validated, but the index appear to be holding on above the so-called psychological level of 10,000 point. While the reversal signal was a little bit on sketchy side, any rebound could be kept given the ongoing trend now is appear to be on a neutral stand. Not down, but neutral. As you can see, the range bounce since for the past few months, so the index is pretty much ranging in the quite wide range of the high and low, sub between 10,000 point to 10,800 point. Regardless, the decline as for last week could actually drag the stock as the index further, with a new new support is actually being pegged at 9850 and 9750. Now moving on into Malaysia market, Bursa FBM KLCI saw a rapid decline below the 200-day moving average last week after a solid sell-off last Friday. The early expectation that the index could trade higher was kept within a 38.2 Fibonacci level, as the index struggling to surge past at the 1465 region. So the decline here could actually extended the ongoing correction toward the next support level, which is seen at 1410, which is also the major downtrend line now turning into a support level, and of course the 61.8 Fibonacci level between the recent high and low structure. I think if there any reversal signal, it could occur between those zones, which actually immediate support zone between 1395 and 1410. Right. Meanwhile, resistance is actually the last week support, now turning to resistance at 1440 and 1464. For small cap, we've seen a bearish divergence. A high-low structure on the index was followed by a lower high structure on the RSI, suggesting there could be corrective move, at least in near term. Long-term structure still remain positive, so we think there's a decent chance for the decline to be kept right within our support level, which is also sit between 50 and 100-day moving average. Support is seen at 15,800 and 15,640, while resistance remains the same at 16,440 and 17,000 region. For JCI index, we've seen a double top pattern, and the index about to break the pattern neckline at 6,900 point, broke out below the level that we mentioned earlier, could drag the index further toward next target based on double top pattern at 6760. Meanwhile, for IDX sector infrastructure, you are seeing a solid breakout above the rounding bottom pattern. So the consolidation you've seen for the past few weeks is definitely considered as a throwback, and we think the downside could be kept within the upper cloud here, and of course the Kijun line of the Ichimoku cloud. So regardless, we think the uptrend to continue once selling pressure has been normalized. The next target is 950 and 1,000 point. For Philippine PCE index is actually expected to trade lower after taking out our immediate support earlier. However, the recent rebound was kept within the immediate resistance at 6,400. We expect the decline could be kept given the strong support that has been put on the stock. So we expect the uptrend to continue once the selling pressure has been normalized. Same thing with the PCE index, Philippine stock in industrial index. We are seeing a similar pattern. Decline could be kept within the recent support, as you see a double bottom kind of pattern. At least for now, we can expect the index to test at the immediate support zone again at 8650 and 8510. For Singapore, STI index rebound was kept within our earlier support, as we seen resistance is pretty strong. So right now we're seeing the STI index continue to range bound right within our high and low structure. So the support we've seen at 3180 and 3130, while resistance will be at 3265 and 3325. For IHS3 index, the decline can be expected further, with the index could actually trading lower, seeking to test the lower support at 1040 and 1010. For Thailand, SET index, the rebound was kept within 200-day moving average. As we expected earlier, the corrective move was more or beyond what within our expected. So that means the decline was much more sharper, and the index has set to test the immediate low at 14,660 region. So we think there's decent chance for downtrend channel to continue. So the next support is actually pegged at 1425. My index also showcase similar pattern. Downtrend channel stay pretty much intact. The index could trade lower, seeking to test the lower support at 440 and 410. Meanwhile, for Vietnam index, the recent failure to create a new high structure was been, I would say, validated by the lower breakout move as the index entered the correction move. The decline below 50-day moving average set to extend further as the recent rejection only within 50% Fibonacci level. So we think there's a room for further decline toward the next support level at 1115 point. While the HNX index also showcase similar pattern, we expect the correction to continue further to the next support seen at 233 point.
Do 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 do.